special evening. Today we are going to talk about traditional finance, and the traditional finance is all about stocks. So, welcome, Mikus.
Hello, Raivo. Thanks for having me back on your show. It was a fun on the first time, and today I want to ask you a few questions about stocks. Are you ready?
Definitely great to hear it from you. Also, good feedback about the last session. So, let's start.
Yeah, let's go. So I don't know much about stocks, but if you could help me, I would be very happy with it. So my first question is, what is a stock, and what does it mean when you buy it?
And well, actually, the stock is basically that you want to gain some share of the company, and then the stocks is usually like the basically the company when it's having its IPO, which means that basically it's going on the exchange, then basically it becomes public, and then anybody can actually buy the share of the company. Before it actually have been going public, then it actually it's pretty limited, and then there is also the founders and investors who are owning the stock and the share of the company. So it's basically the share of the company, and also that means that you can get also some share of the profit. And basically, if you decide to buy some share of some company, then you also should believe in the company's growth into the future, and also in the growth of the profits. So that's basically the idea of owning the stocks and owning the share of the company, is that you actually invest in that idea, invest in that company, invest in that people, that and you believe that actually this thing will be growing in the future, will be making more money into the future, and will be making more profits, and therefore also your investment will be making you some profits. So that's the main idea behind the shares and the stocks.
Uh, yeah, but is it possible to get something else from a stock, or something like dividends?
Yeah, basically the dividends, that's in a simple word said, it's basically the share of the profits. If the company decides to share the profits in the end of the year, if they even have the profits, because there is many companies who never get profitable. So hopefully you will not get on some kind of such companies. So therefore dividends is definitely important part of the shares and all this idea basically. So but the reality is that there are quite a few companies which actually pay good dividends, and those dividends typically are pretty small. If you are not having a large part of the company shares, then the dividends actually are pretty small, and therefore it's more about finding the stock and the company which is growing itself, than actually trying to find good dividends. So that's how it is.
Hmm, I understand. And are there any risks when owning a stock in your portfolio, or is it just easy money and safe?
And basically, of course, when you invest in something, there is always the risk. So, and also the risk is to hold your USD or euro, because it's always devaluating in the value. So it's also a risk to hold the Bitcoin, because the Bitcoin also is volatile, right? So, and the same is also for the stocks and for any company, because when you invest when you buy some stocks, you invest in some company, and so that means you basically trust your money to some small part of the people, right? Who believe in some kind of idea, who produce some kind of the service or the product, and if they have some struggle, they can't sell, they can't profit on it, they cannot develop it even more, they are pushed out of the market, then you basically lose your investment, or you can lose it all pretty quickly if the company is bankrupt. So therefore I would say that there is definitely a risk, but without a risk, there is basically nothing in this world. So, if you want to grow your funds, your money, your profits, and your wealth, then definitely also the stocks is the thing to go into.
Mm. And if we want to know more about all these risks before buying any stock, at what data should we look at?
All right, here I can actually share with you some very interesting site where there is a lot of information regards the stock evaluation. Let's begin with that. So first of all, it's called simply Wall ST, which I have used also in the previously quite a lot when I was considering to buy some single stock or share. So it's also very good for the beginners because there is a pretty nice overview of all the main stocks available available in exchanges. So basically, you can search for any company you wish to look further on. Let's currently look on Nvidia, which have been in the previous few years very hot and grown up very strong. So let's see how the evaluation looks right now and if it's a really good idea actually to buy it currently. So first of all, there is overview what the company actually is doing. Then there is valuation, where compared to, for example, other companies in the industry. And then, for example, the one of the most famous measurement is actually price to earnings ratio, where you can actually see how is the price share price regards the earnings of the company, and this ratio basically is typically compared to other companies into the industry, and then you see where actually your chosen company stands. And as we see here for Nvidia, that we see that basically it's a lot higher number than any competitors in the field. So therefore, you can from this consider actually Nvidia a bit overbought company, not oversold. So basically, that means that there is more chance that company might go down than actually go up. But also, it's important to mention the price to earnings ratio, just one of the measurements, and you have to take into account a lot of measurements to really see the whole picture. For example, there is also price to book ratio, which measures how actually the company is booked in the future, 6, 12 months, 2 years, and also earnings ratio, profit margin, liabilities, how much of those they have, debt to equity ratio, future targets, analysis, developments. There is a lot of things, and also past performance and financial health as a balance sheet. Basically, also there are pretty nice charts, tables, and diagrams in this site where you can actually see a lot of measurements regards the company, and then you can basically probably take the paper and just check which ones are meaning that it's time to buy, which ones actually means that there might not be the best time to buy. Probably it's a good time to sell. So therefore, also there is information about dividends. Is it paid out? Is it not? There is also information later on also about insiders activity, which is pretty important. You see all the shareholders, all the main shareholders, all the management, how long is the tenure, because that is also important to see how long actually the people work in the company, how long actually top management works in the company, how stable is the performance, how much equity actually they are holding. So, and what they have in the end, the most important, what they have done in the last months or years. So, and there you see that basically there is only sales from the insiders, and that means that there is probably not really the time to buy. and most likely the company is overvalued, because that is definitely the signal that there is time to sell. For example, in this case, I would like to mention also that in November 2021, I guess, when there was those all-time highs for Tesla, there was actually huge volume of the sale from the Elon Musk, and he sold a lot of Tesla shares in that time. So, and that was the all-time high price for the Tesla, and currently is also the all-time high price for the Tesla still from that date. So, and then it just started to fall and fall and fall, and so therefore it's quite important to look at insiders' activity, especially if they are moving large sums of money. So that's definitely not for the definitely for the reason what they are doing. So, and if we look to the chart, for example, right now for Nvidia, that we also see that basically lately there is a lot of down move started, and we saw this huge move up in the previous. Let's see, for example, let's take some longer time frame. If you take the weekly chart, that we see that basically from 2022 December we have been up like really good percent. Actually, the percentage wise 444%. That's almost sounds like the crypto investment, right? So therefore it's also, if you catch the good stocks, it doesn't mean that you will get a less than in crypto. You can get even more. So therefore there is not that huge difference between the crypto and the stocks in some point of view. So yeah, that's how you can evaluate, and evaluation typically begins with the industry itself. Is it growing industry? Is it not? Is it a decreasing industry? Because when you really want to buy something which grows up in value, you want to see that also there is growing market, because for the company to grow, there should be growing market in the first hand. Then there is the free money to just to be booked, right? If there is no growing industry, then there is pretty hard for the company to grow, because then only the way to grow for the company is to beat others. So and that's much more harder than actually take as a free market.
Yeah, I see those. There are many data that you should consider before buying any stock, and I guess even for a professional, it's not that easy to look at everything and make the right decision. So in this case, maybe it's I don't know, safer or easier to buy a stock fund than a single stock. What do you think?
Yeah, definitely. I suggest, if you like the stocks, then definitely large part of your portfolio should go to the funds, to the ETFs, which cover basket of stocks. So basically, you are much safer. The gains are much more predictable, and of course, they are not that quick. But we are working on the fund, which will actually be the market 10x. So and that will work on the funds, on the ETFs. And with our strategy, you can actually also increase your returns. You basically can get more than buy and hold strategy, almost 10 times more. So therefore, I suppose it's much safer, much more secure actually to go into the index funds, ETFs, which covers the basket of the stocks. Then you know that in the worst case scenario, there can be like the drop maybe 30, max 50%. And actually, if you add the good trading strategy to the fund, then you can also increase your returns overall. So that's definitely the better way to do than actually to try to catch some next big thing into the stocks. So because the stock world is huge, and if you want to see also some more professional side, then that is finviz.com, where there is a huge amount of information. You can basically see a lot of things. You can see patterns. You can see stocks every day in some special patterns. You can see overbought stocks, you can see oversold stocks, you can see a lot of information. But still, if you really want to get the full picture of some company, it's not enough is going to those sites. You really have to know the management of the company. You have to know what's going in. You basically have to know insider information in the company. You have to know the industry. You have to know where they're standing and where they are heading to. You have to know the innovations they are working on, and and also those balance sheets. They used to lie. They used to hide information. They used to show different numbers. You never know how much exactly is the profit. Probably company have invested into the development all the profit, even more maybe, and then it shows minus. You never know how those numbers are shown. So therefore there is so much information that it's hard actually to figure out a good stock to invest in if you want to. And of course, also I would like to mention that if you consider those large cap stocks like Microsoft, Amazon, Apple, whatever, Nvidia, Zoom, or whatever, they are already too late to invest. If you want to invest it in such company and hold it for 10, 20 years, because only for the very simple reason. For example, if you look to the top 30 companies in the world in 1990, then you see completely different list of the companies what you can actually find out for the top 30 companies today. So and that actually is a human psychology. Basically, there are the ones who are designing, and they are the hardworking, they are pushing the limits, and they are creating this new big thing. But the ones which are the management which are coming next, they are not those who made it. They are just coming and enjoying basically being in the top leading company. They typically then come from the leading schools, everything like that, but they are not entrepreneurs. They are not anymore that crazy. They are more about enjoying the benefits they can get actually in the leading company. And at the same time, there are some other people in other parts of the world which are going a lot more crazier, and they are much more hungry, and they are again discovering something new and making the new things. So therefore they are then, after a while, they are beating those previous guys. So therefore it's like it's a growing stage. 20, 30 years you become the leading one in the world. Then it's like stagnation stage, which is basically you are already losing the path. And then there is just disappearing stage where you basically go bankrupt, or there is a huge change. So therefore this is just a human psychology, and therefore also those index funds and the basket of the stocks is a much better investment than any large cap stock. With the large cap stock, you can maybe only what you can do is in some certain moments start to short it in the long term, but that is quite risky because shorting can be liquidated anytime. It's always with the leverage, because you basically sell something you do not hold and try to buy back more when it's lower on the price. So therefore basically there is nothing to do with the large cap stocks if you want to really make some gains. And there is a lot more than in the small cap stocks, but there are, again, as I told you, it's quite hard to evaluate. And when you evaluate maybe 10 companies in some potentially nice industry, growing industry with the new market opening up every day, then also from those 10 companies, probably one is good enough to invest in, and then you have to find even 10 more such companies. So, and then you can imagine how much work actually it is. And then from those 10 investments, actually one will work when you really find maybe 2, 3. Okay. So if you are really, really lucky, then maybe 5, 6, 7. So, and therefore it's pretty complicated job actually if you want to find really good stock.
I believe, yeah. And for any beginner, that's a very complicated task. Can you name any popular stocks besides Nvidia that have had big gains in last 5 years? Or
Yeah, there have been many, depending on the economic situation. For example, when there was COVID, there was Zoom was booming. All of those basically similar apps were booming. Also, those dating apps were booming. So also those medical, those pharmacy which were creating those injections, stupid thing, but also those were like making crazy money. And so it's all about about time, and that's more about macroeconomics. And then you can, if you understand which way we are currently moving on, then for example, okay, you missed this boom for the Zoom, but then the COVID is going to the ending phase, then you know that actually it's end also for the Zoom boom. You have to start short. So you can go short then. Yeah, then you can short. Yeah. Okay, you missed this first pump, but where there is pump, there is coming dump. So
dump?
the same we saw also for the Nvidia right now. So that we see here quite well. Also for the Tesla. So because people are typically they used to hype. They are somehow somehow they like hype. So and retail people who are not every day in the markets, they just start to hear about the certain company when it's actually already running crazy for some time. So, and then they are basically the last ones actually investing in those companies, and they really don't think ahead. They think that it will like continue like crazy, but it's simply if you just put in some simple maths, you understand it's impossible. It's already overvalued. It's already 5 times more overvalued than any other industry company, probably. So then you see insiders selling, and then there is retail still buying. The retail is the one which are buying those insider selling activities, because in the market it's always when somebody is buying, somebody is selling, and somebody is selling, somebody is buying. So the smart money is selling, stupid money is buying, stupid money is selling, smart money is buying. So and typically also therefore what you see in the news, it's actually opposite in the markets. When the news are already out, then the market is already moved, and what you can do is just the opposite, because retail is the one which are moving accordingly to the hype, and then the retail is is a large part of the crowd, large part of the people all over the world putting in some small amounts of money, and then there is these whales which are small amount of people putting in large amounts of money against those large population moving the small money. So basically the big money is typically you doing just the opposite, so what the small money is doing. And yeah, that's how it is in the markets, and that's how the psychology of the markets work. But also when I was starting, I was also starting when the actually crypto was booming in the previous cycle. So I made the same mistake. But when you stay in the markets for the longer time, then you start to understand everything, and then you understand also this psychology, and then you can develop the things further and get actually really good at it. So that's how it is.
Yes, I agree. And I heard the saying somewhere that if your taxi driver tells you where to invest, then it's time to sell or not get into the
Definitely,
market.
definitely. I was in when I was in Las Vegas. Then also my taxi driver was telling that actually it's good time to buy the real estate, because, and he was like saying, because actually he bought his home 10 years ago, or now maybe even less, like 6 years ago. Then it was worth 200K, and now it's worth 600K, and then he said, okay, he should go to the real estate. But then I said to him, hey, but the value have grown up already 3x in a couple of years for real estate. Is just already crazy. So what you can do right now with the real estate is sell, not buy. And then actually he found out also this basically idea that probably so. Probably not the best idea to buy when it's 3 times more expensive than actually you bought a couple of years ago. So because somehow many people believe that it will continue and will never stop. But typically when there is this belief, then there actually is pretty close this turning phase. So
yeah, and I think it happens once in a few years, and nothing changes in people's how they behave in the markets.
Yeah, of course. And the more there is leverage, the more there is credit, the higher the pumps and the dumps. The more there is, the more we live in the basically future money, which is credit, the more actually these fluctuations happen. If there is no credit in the world, there is no leverage, then there will be straight line in the markets also. Much more straight line than it's right now. But also then there won't be economic growth. It will be much slower. So therefore, the credit is definitely needed. All businesses are growing on the credit. And actually, credit gives this opportunity to basically build business. So therefore, and the central bank is the one which actually tries to leverage this a little bit down, try to have some stable growth of 2%, 2-3% per year. But as we can see, it's pretty hard sometimes to manage the stable growth and stable slow growth. So, and they have some tools to actually get it right. So that's one of them is interest rate, which basically gets the credit more expensive or less expensive, or even giving it almost for the free. So, or even printing more money. So that's the tool to actually boost or slow down the economy. And there is also, of course, tax policy. If you want to, for example, boost some certain part of the economy, some industry maybe is struggling, then you can actually decrease the tax in that industry, so that industry can also develop further. So that's also the tools how you can leverage the economy, and they trying to do it, but still there is a struggle on it. As we can see also in the US, currently there is still struggle to leverage down the inflation to 2% target. It's still around 4% target right now. So even with the high interest rates.
Yes, that's how it is. And Raivo, my last question, probably your fans already know the answer, but I just want to ask just in case. Which asset would you buy before buying any stock?
Bitcoin. Maybe not Bitcoin, Ethereum. So Ethereum probably more potential because there is a lot more developer activity. There are smart contracts, and there is also BlackRock's token on it. So there is a lot of growth potential for it. Definitely, as halving was just yesterday, basically. So there is still the way to make money on the crypto in the next 6 to 12 months time. So then I would say then it's much better to leave the crypto market for maybe 1 or 2 years, so or short the market. It's all cyclical, and that's how I would say, because it's much more simpler. It's much more simple for the people to understand, and there is much more hype, so there is much more potential to actually also getting more money on it. So and the like certain stock is heard a lot less, there is of course then much less pump, but also there is huge risks. So there is other competitors and everything, as we told today. So
thank you, Raivo, for this just basic information about stocks, and I understand now that you have to know a lot more before getting into this, and yeah, not that easy as somebody tries to tell you on TV to buy it at the best
yeah,
price.
yeah, definitely. And I sometimes feel so stupid when there is a channels every day talking of, okay, today we are going up, today we are going down, today we are going up, today we are going down. It doesn't say anything. It doesn't help anyhow. So it's just, or they say one single thing of all this puzzle. For example, price to earning ratio. There is so low price to earning ratio. This is so good company. Just buy. It's only the one piece of the puzzle. You have to know rest 99 pieces to actually consider the real buy or sell. So therefore, it's stupid to mention one thing out of the whole context. No. And there are many channels which are just going that way. No. Just trying to get attention on an everyday basis. So that doesn't just make any sense.
Thank you.
Thank you, Mikus, also. So see you guys next time.